Good Monday morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Credit downgrade. The 30-year Treasury yield hits 5%. The dollar and S&P futures slide after the US government loses its last remaining top credit rating, Moody's citing the ballooning budget deficit. Donald Trump is set to hold a phone call with Russia's Vladimir Putin as Washington looks for progress after last week's failed peace talks. Plus, resetting relations. Last-minute negotiations as the UK and EU haggle over their post-Brexit future ahead of today's crucial summit in London. Breaking lines coming through from Ryanair now with the latest numbers on earnings. The company announcing a follow-on share buyback of €750 million. Ryanair also coming through with full-year profit after tax of €1.61 billion, bang in line with the estimates. We know there are question marks about deliveries, of course, continuing around Boeing aircraft and the impacts of tariffs as well as those negotiations continue between the Europeans and their US counterparts. We're going to be speaking to the Ryanair CEO, Michael O'Leary, at 6:40 UK time. So stay tuned for that interview with the CEO, of course, of Ryanair, that airline, coming up later in the show. Let's get to the broader picture on the markets then with a focus on the Sell America trade being back, at least for now, on this Moody's downgrade to the rating for the US, the final of the three major rating agencies, of course, to come through with that decision on Friday. And you're seeing the moves in the Treasury markets. You're seeing the pressure on the dollar and on equities as well as a result of this move. Maybe it is not material in terms of the assessment of Moody's, but it's a renewed focus on the debt sustainability of the United States. European futures currently unchanged, looking for direction. FTSE 100 futures here in the UK currently down 0.3%. We watch, of course, the negotiations between Brussels and their counterparts here in London at this meeting in the capital later today. S&P futures currently pointing down by more than 1% on that downgrade, it seems. Nasdaq 100 futures also taking a knock of 286 points. Let's flip the board and have a look cross-asset then with a focus on Treasuries, where you're seeing that curve widening in terms of the gap between the twos and the long end, where you're seeing a bid for the front end of the Treasury curve. So that steepening is happening right now. The 10-year, of course, in focus, but it's the 30-year where you saw that line crossing in terms of yields up above that 5% level. The last time I checked, you were sitting at 4.99. The 10-year right now at 4.51. You're seeing, of course, that reassessment in terms of the budget deficit stateside as they push through that tax bill as well, making further progress in the last 12 hours or so on that front. Euro dollar at 1.11, the single currency up 0.2% on that dollar weakness. Brent at $65 a barrel, down 0.5 on oil, and gold getting a bit of a bid. That's safe haven, seeing a bit of renewed interest on the back of the downgrade from Moody's, then up 0.5 for the yellow metal. Let's flip the board and have a look at what's happening in Asia, with numbers coming through from China on industrial production that came in better than expected. But for me, it was retail sales that were softer and further weakening house prices that continued to put the spotlight on what is a softening Chinese economy. But it was factoring output that did come in better than expected in the light of those tariffs. That is important as well. CSI 300, of course, in China on the mainland down 0.4%. HSI in Hong Kong taking a bit of a knock as well, down 0.4%. Investors questioning how much more stimulus is going to come through then from Beijing. And the Japanese currency getting a lift on the back, again, of weaker dollar at 145, down 0.3%, the US dollar versus the Japanese currency. Now, the US Treasury Secretary, Scott Bessent, has downplayed concerns about the US government debt following that downgrade from Moody's. Bessent spoke to NBC's Meet the Press over the weekend.
We didn't get here in the past 100 days. It's the Biden administration and the spending that we have seen over the past 4 years. You know, we inherited 6.7% deficit to GDP, the highest when we weren't in a recession, not in a war, and we are determined to bring the spending down and grow the economy.
OK, let's bring in Bloomberg's Valerie for the market take on this. So, Val, we talked about the 30-year crossing that 5% level, now at 4.98. You flagged to us last week the importance of that 5% level on the long end of the Treasury curve. Talk to us about how the markets are adjusting to this downgrade.
Yeah, the biggest thing to me overnight is this move in the long end of the Treasury curve, breaching that 5% for the first time since April. Now, the 30-year yield has yet to sustain a closing price above 5% since 2023. So if we do close above 5% at the end of today's trade, that would be a big headline, one that perhaps the Trump administration does not want to see. This Moody's downgrade, though, has really ignited this sell America trade across assets. Let's flip the board and take a look cross asset, because we are seeing U.S. equities lower, treasuries lower, and the dollar softer. This is kind of a mini sell America trade reappearing in the markets right now. But with S&P futures down just 1%, it really pales in comparison to what happened back in 2011. August 2011, we saw the first move of the downgrade by S&P, and the equity market off the back of that was down 6.7%. The latest downgrade that happened in August 2023 by Fitch saw the S&P drop by 1.4%. So you can see, Tom, how these downgrades incrementally have had less and less effect on the equity market.
And yet the debt pile in the US is so much larger than it was back then. And we get the tax bill and progress on that front, which could further expand that national debt pile. Val, talk to us about the developments in terms of pushing through those tax cuts.
Yeah, I think this is going to be really the leader for the market this week. We don't really have a lot of data this week, so I think the market is really going to have its eye on this bill making its way through the House. It was passed by the House Budget Committee just a few hours ago in a late Sunday vote that saw these Republican hardliners abstaining from the vote, getting it passed due to maybe some cuts in the Medicare sector. And I think that's what the market is really going to focus on. Net, how much spending is in this bill, and what percent deficit will it add to GDP? As you heard from Scott Bessent there, we are running a very wide budget deficit in the U.S. 6.8% is one of the widest we've seen in a peacetime expansion. Keep an eye on the net spending that's coming out of this House bill. But if you flip on, take a look at how the Treasury curve is reacting. It's steepening, whether it's this House bill and the spending entailed or the Moody's downgrade. It really just points to deterioration in credit quality. You see that U.S. 30-year yield 4.99%.
OK, Bloomberg's Valerie Titel, thank you very much indeed on that market reaction to the downgrade, of course, and progress on the tax bill front for the Trump administration. Meanwhile, on geopolitics, President Donald Trump says he will have a phone call with Russian President Vladimir Putin today to discuss how to stop the war in Ukraine. This comes as Kremlin forces launched the largest drone barrage over the weekend since the start of Russia's full-scale invasion in February of 2022. For more, let's bring in Bloomberg's Oliver Crook in Berlin. Ollie, a source then telling Bloomberg that Putin is confident Russia has a strong hand ahead of this call.
Yeah, and really, Tom, we're just waiting for that sort of breaking point and that sort of moment of truth in this conflict. We know what the stated ambition from Donald Trump is from even the election campaign, really ending the war, getting the parties to a ceasefire. Everything so far has sort of failed to get there, and that has been in part because it seems, according to a lot of the leaders that I spoke to from the European political community over the weekend, their appraisal is, of course, that Putin is just sort of stalling for time in large part because he sees himself as at an advantageous position, grinding forward on the battlefield, able to sustain this for a great many months and potentially years to come. And so as a consequence, is not really inclined to get to the negotiating table with Donald Trump. What we have got from the Trump administration, at least in the last few months, going into this phone conversation, which we're expecting at 10 a.m. Eastern time, 4 p.m. Central European time, is the idea of what would happen if Donald Trump were to determine that Putin is actually the impediment to peace, and that is the secondary sanctions that have been proposed by Lindsey Graham, so-called bone-crushing sanctions, which would target third-party countries that still buy Russian oil and gas and nail them with a huge number of sanctions. That would be a major move. The question is, will Zelensky so far be able to convince Donald Trump that Putin is the impediment to peace? We've had a flurry of diplomacy. Zelensky speaking with J.D. Vance, we should say for the first time since their catastrophic encounter in the Oval Office a little bit earlier this year. We had Starmer, Meloni, Merz, Macron on the phone with Trump yesterday. All of this stuff prepping going into this call, really waiting for that decisive moment. So we will have to see what happens a little bit later today, 4 p.m. Central European time. That is when they're scheduled to talk. After that call, we understand that Donald Trump will speak to Zelensky and a number of NATO allies to see if we can make a meaningful step forward in potentially those peace talks, because what the object is of these conversations now is that 30-day ceasefire. We have failed to get any progress on that so far.
What then, Ollie, is the relevance of the result that's come through out of Romania in terms of their presidential election? A pro-European centrist then beating a far-right nominee who was leaning into Trump-style policies.
Yeah, and Tom, that would be enough to make it a very sort of interesting election campaign, right? You had the sort of the future of Romania, a country that has sort of hung in the balance for a great many decades in sort of the post-communist era. Now sort of at a decisive moment, is it going to go sort of swing to the right, be Euro-skeptical, move away from all the sort of traditional mainstream European ideas, or towards the center? And that's what we saw. We saw it move to the center. But Tom, the main sort of intrigue is that they tried to hold this election already last year in November when a sort of unknown candidate won the first round by about 22 percentage points after a social media campaign that the sort of establishment said was prompted by Russia, that sort of then sort of shot off this candidate that no one had ever heard of before. And then they canceled the election. And this is something that was criticized by J.D. Vance in his very famous sort of Munich speech, the Munich Security Conference, saying that basically the establishment has moved in an anti-democratic way and that there's a, sort of the enemy from within. This became the sort of object of one of the great issues for the United States in its view of Europe. So what we now have is potentially, you know, hopefully the resolution to that now with the election of a candidate decisively. We had a higher turnout than we've had in about 25 years in Romania for the centrist candidate, Nicu Șordan, to take over the presidency and sort of continue the path of Romania on that sort of pro-EU footing. What we expect to see now is potentially a sort of reassurance from the market because, of course, Tom, this has caused a huge amount of uncertainty. Hopefully that puts that to bed as far as the markets are concerned.
OK, Bloomberg's Oliver Crook in Berlin. Thank you with the preview of that phone call, of course, and the details and results out of Romania. Now, to London, where this meeting is happening later today between UK and EU negotiators. Still racing, though, to resolve policy disputes ahead of that summit, aiming at resetting post-Brexit ties. Prime Minister Keir Starmer will meet with the presidents of the European Commission and European Council in the capital later today. Let's bring in our UK correspondent Lizzie Burden, who's going to be covering all of this for us. What is likely to be announced then today, given the last-minute negotiations?
Well, I would say, Tom, first of all, that this is absolutely crucial. It's the first UK-EU summit since Brexit. And look, the strategic context, as Ollie was alluding to, has completely shifted. You've got Trump's trade war, but also Putin's war on Ukraine. So that context changed, but fundamentally the old Brexit red line is very much still there. And politically, individual leaders really need to project strength in the face of some of those right-wing oppositions, again, that Ollie was talking about. So in terms of what's going to come out of this, of course, upbeat mood music, but below that, the nitty-gritty will come in three parts. One, a defence and security agreement. Two, a common understanding on future cooperation, and that's things like access to e-gates at passport control. And then thirdly, a statement on closer alliance in these uncertain geopolitical times.
What have been the thorniest issues? Because, you know, we know it's coming down to the wire at this point on some of the key topics they want to have agreement on.
Yeah, absolutely. I was speaking to the UK Defence Secretary John Healey last week, and he was saying that they were in the hardest yards of these negotiations, and they continued in Albania last week on the sidelines of that European Political Community Summit in Tirana. What we're hearing out of the talks is that, as ever, fish remains as thorny an issue as it always was. Britain wanted a 4-year deal after the expiry of the fishing rights next year. France said, we want longer than that. And France said, if Britain only wants to go for a short deal on fish, let's give them a short deal on food checks. Let's not give them a deal on security and defence. This is what we're hearing out of it. One senior British official told us they thought, that's ridiculous. Why would you squander an opportunity to show unity to Putin just to bargain for better terms on fish? So to try and square that circle, Britain said, we'll show you a bit of ankle when it comes to the youth mobility scheme. We'll give EU national students the same tuition fees that British student pays for British universities. But then you've got to carve out space in the numbers for those EU national students to come over, and that's why you had that crackdown on immigration from Keir Starmer last week. So in hindsight, looks like less of a contradiction. But as you say, Tom, really coming down to the wire all this. So we need to see what comes out in the settlement, but the key issues: fish, food checks, defence, youth mobility.
Fish. I mean, what percentage of the UK economy comes from the fishing industry? It's pretty minimal, isn't it? All right, Lizzie Burton, thank you very much indeed. Lizzie's going to be across the story, of course, for us at the summit. As she has said, it is really crucial and a really significant day, of course, in terms of EU-UK relations. So keep across Lizzie's coverage, of course, throughout the rest of the day. Here's what else we're thinking about for the day ahead. On Tuesday, looking ahead to Monday, to Tuesday, in fact, there's other stuff happening today, including that summit, of course. We continue to watch the fallout of the Moody's downgrade in terms of these markets. But focusing on what's happening tomorrow, it is the Qatar Economic Forum. We are on the ground for that as well, with some really fantastic interviews being lined up throughout the week. That kicks off on Tuesday. On Wednesday, it is UK CPI, so inflation data out of the UK, as investors still question how far the BOE can go in its expected additional interest rate cuts through the rest of the year. So that could be important as well. We'll break that number for you, of course, live. And on Thursday, global flash PMIs, so the health of the manufacturing industry globally, that sector, of course, in light of these continued tariffs and trade uncertainty. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go. And, of course, the downgrade from Moody's is dominating that coverage, with the Sell America theme back in focus for investors. Coming up, do not miss our interview with the CEO of Ryanair, Michael O'Leary. That conversation coming up at 6:40 UK time. This is Bloomberg.
This week, Bloomberg brings you live coverage from the Qatar Economic Forum. Bloomberg Horizons Middle East and Africa and The Pulse will be broadcasting live from the conference floor. Then, throughout the day, we'll bring you all the highlights from the key policymakers and market movers on the issues confronting the global economy. Live coverage from the 5th edition of the Qatar Economic Forum continues this week right here on Bloomberg Television. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. Israeli officials say they are poised to order tanks and troops into unconquered parts of the Gaza Strip in an all-out bid to destroy Hamas. This comes as Prime Minister Netanyahu's office says Israel will shortly begin to allow what it described as a basic amount of food to enter the territory. The country has imposed a full blockade on Gaza since the start of March. Joining us now from Jerusalem is Bloomberg's Dan Williams. Dan, let's start on the question of food, the risks around mass starvation that have been flagged by the United Nations. What do we know about the reports that Israel may be easing up this blockade?
Good morning. Yes, this was a decision issued by the Israeli Prime Minister's office yesterday evening. We understand that right now, as we're speaking, the trucks are rolling into the Gaza Strip. That would be for the first time in more than 11 weeks. Given that on March 2nd, Israel barred all imports to the Gaza Strip, including aid, including food, as part of what now appears to be a last-ditch combined attempt to force Hamas to release hostages or even force Hamas to capitulate, surrender, or face destruction, because at the same time that Israel is now bringing in what it's describing as a stopgap amount of food, the amount of food required to bridge the 1 week it says remains before it can set up long-term distribution centers for civilians needing food. It is also in parallel launching what it calls Operation Gideon's Chariots. That operation is meant to last 3 months. It's meant to see the entire Gaza Strip overrun, Hamas holdouts destroyed, and willy-nilly those remaining 58 hostages rescued, Israel hopes alive. But the hostage families obviously wonder if military forces employed, if that might not actually endanger those hostages in the course of the operations.
Dan, what is the latest in terms of potential ceasefire conversations between the two sides and possibly that hostage deal?
Well, last week, President Trump, right before he visited the Gulf, he actually surprised everyone, including the Israelis, by clinching a deal independently with Hamas, under which Hamas released an Israeli-American hostage, the last living American passport holder among those hostages. What that did was it prompted Israel and Hamas to return to Qatar, a mediator country, to see if they could resume talks on negotiations. Israel says that its renewed or its escalated military pressure has now prompted Hamas to drop any preconditions for those talks. Right now, we know of no breakthrough on those talks. Israel says it will continue now with this offensive, with this escalation. It's worth noting we're hearing reports in southern Khan Yunis of an especially intense ground operation that happened in recent hours. Israel says that this pressure may be what's needed to force Hamas finally to capitulate on the matter of hostages, and if not, then sheer military force will bring this war to a close.
Bloomberg's Dan Williams in Jerusalem. Thank you for that update. Coming up, commercial shipping faces an environmental wake-up call. We're going to switch focus and look at the cost and challenges to lowering the sector's carbon footprint. That's coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Monday, everyone. Earlier this year, the European Union extended carbon emissions targets and penalties to shipping, with ship owners facing the potential of major cost rises. Nicholas Solopoulos, BloombergNEF's head of commercial transport research, joins me now for the details and the implications for a pretty significant move on the regulatory front for the EU and for shipping as an industry, of course. So the Fuel EU maritime regulation is now in place. Talk us about the rationale for this and the potential implications then.
So it is a part of a broader set of measures by the European Union to tackle CO2 emissions across the economy. So this is particular for shipping. I mean, for context, shipping is about 3% of global CO2 emissions and equivalent share of European emissions. So what the European Union aims to do is to reduce those emissions, and it's doing so by setting limits on the carbon content of fuels that are used on board vessels that call in European Union ports. And that limit is 2% lower emissions this year versus a 2020 baseline. It goes up to 6% in 2030 and all the way up to 80% lower emissions from the fuel by 2050. So this is said to have major implications in the shipping industry. It is, of course, restricted to vessels that call on European Union ports, but the impact that will have is that it is set to sort of fundamentally alter the energy sources that go into shipping. It will still be liquid fuels, but not those that are derived from fossil fuel. I mean, the main fuel that is being used now in shipping, fuel oil, does not even now meet those targets. So ship owners, shipping companies, fuel providers will have to switch to alternative forms of fuel, lower carbon equivalents.
So the aspiration, of course, is emissions come down across this industry,
exactly,
but there's a cost, at least in terms of financial cost. Talk us through the financial cost to the industry and what it could mean for prices as well.
So, given the fact that the main fuel does not yet meet the requirements, we see that even this year, an aggregate cost of about 700 million euros in terms of penalties for the shipping industry. That is ship owners and ship operators. That rises to about 2 billion per year by 2030, and then rises a lot more beyond that. So to put that into context, I mean, 700 million euros annually on a per vessel basis. So that's an aggregate figure. On a per vessel basis, we're talking about 15% maybe of thereabouts, and additional to the cost of fuel. So fuel oil is about $500-600 per ton. So we're talking about 15% on top of that. Looking forward 10 years from now, we're talking about doubling that figure. So by 2035, twice as much for fuel as now.
Just briefly, because we're running short of time, how are they looking to adjust then, the shippers, to this?
Oh, it's primarily ordering vessels with that are using different forms of different fuels. So primarily liquefied natural gas. There's a lot of liquefied natural gas vessel orders, and these dominate the order book. Biofuels, and of course there are further down the line what you call synthetic fuels made out of green hydrogen and carbon such as methanol, ammonia and others.
Nicholas, great breakdown. Thank you very much.
Thank you very much.
In terms of what's happening across the shipping industry on these new regulations here in Europe. Nicholas Solopoulos, Head of Commercial Transport Research for BloombergNEF, with the details there. And tomorrow, BloombergNEF is holding a summit in Munich, by the way, for leaders in industry, manufacturing and energy. You can find more details on bnef.com. Coming up, we're going to focus on a listing in Hong Kong, CATL, the battery maker. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Credit downgrade, the 30-year Treasury yield hits 5%. The dollar and S&P futures slide after the US government loses its last remaining top credit rating. Moody's citing the ballooning budget deficit. Donald Trump set to hold a phone call with Russia's Vladimir Putin as Washington looks for progress after last week's failed peace talks. Plus, resetting relations, last-minute negotiations as the UK and EU haggle over their post-Brexit future ahead of today's crucial summit here in London. Let's check in on the markets then with that Sell America theme back in focus after the downgrades from Moody's on Friday, the final of the three major agencies to come through with that, highlighting again, putting the spotlight again on that ballooning budget deficit and the debt load of the US as they work through additional tax cuts, and that bill making progress just in the last few hours stateside as well. European futures looking for direction. There's a clearer call on US equities on that risk-off sentiment. S&P futures pointing lower by a little over 1%. Nasdaq 100 futures looking to drop around 290 points. Here in the UK, the FTSE 100 are currently pointing lower by 28 points. We focus in, of course, on any progress between Brussels and London at this summit in the capital later today. Let's flip the board and have a look cross-asset, where the focus is on the Treasury curve, of course, steepening that we're seeing. Bid for the front end, so yields are down on the front end on expectations that the Fed is still in a position to cut, but it's the long end where there is that scrutiny now on the back of that Moody's downgrade. So yields are up on the long end. You did cross about 5% on the 30-year. I'm looking right now at the 30-year. The yield is currently at 4.98. So yields up 4 basis points on the long end. So you're seeing a sell-off in terms of the long end of the Treasury curve and a modest bid to the front end on the 2-year. So continue to watch those dynamics. Euro dollar at 111, up 0.2. That's less about euro strength, more about dollar weakness in the session. Brent at $65 a barrel, down 0.5%. And gold getting a bid as well in this equities risk-off and safe haven focus right now. So the yellow metal gaining on the back of those developments, up 0.5%. Now, it is the world's biggest listing so far this year. Chinese EV battery giant CATL debuting in Hong Kong tomorrow after raising $4.6 billion in secondary listing. The world's largest EV battery maker by market share is looking to expand in Europe after its first quarter earnings increased by 33% year on year. Bloomberg Asia Equities senior reporter Abhishek Vishnoi joins me now. Abhishek, it's a huge listing then, globally as well, and not just in Asia. And this is a company that dominates in terms of its build-out of EV batteries. Talk us about the capital market importance of this IPO, but also what it signals about China's strength within this part of the industrial supply chain for electric vehicles.
Well, it is, a debut of a world's biggest player in a leading industry, growing industry, and with one which has priced the IPO at the upper end of price range. It has all sort of positive connotations for China as well as global ECM or Asian ECM industry. For China market, it sort of solidifies the role of China, the increasing role of China as a tech bet in portfolio, as possibly as a replacement of Max 7. CATL is not just about EV battery, it's also a partial tech play, so that supports that argument. The second important point is that because it got subscribed at the upper end of the price range, this is a very good signal for all Chinese leading companies who are planning to raise money, list in Hong Kong. The third important takeaway is that, this also sort of dissipates the risks around possible delistings from the US. I mean, if HK is the place where CATL is debuting and, it has gotten great reception, good subscription, it can be a playbook for all the companies that are listed in US looking for a home. And this also sort of solidifies Beijing's commitment or resolve to treat to continue treating Hong Kong as a global financial center, which in turn means that this is also great news for HKEX. Hong Kong Exchange have seen a lot of IPOs this year. And CATL is just adding to that kitty. So all in all, it's a big positive for the stock market. It's a big positive for Asia, ECM, China specifically. And it also solidifies China's case as a tech bet in the portfolio. Now, in terms of listing, I mean, it's a very big company which is debuting, right? And it got priced at the top end of range. So it isn't like Mixu or Blocks, which saw 40% increase on their debut. It's a big stock. It's a portfolio bet. The upside may be capped in the initial few days, but it's a portfolio bet which is likely to build upon its strengths.
Mm-hmm. OK, Bloomberg Asia Equities senior reporter Abhishek Vishnoi ahead of that CATL listing, of course, in Hong Kong tomorrow, the significance of it globally as well. Now, from the forefront of EV technology to data security, UK tech startup Valarian is on a mission to change the handling of sensitive defence and national security information. The firm's CEO and co-founder, Max Buchan, joins me now for the details. Max, thank you. Welcome to the studio, bright and early, of course. You've raised the capital. You've come through, of course. You've been in a quiet period, essentially, as you've built out the services and the product and raised this additional capital. Talk to us about what you guys do in an environment, of course, that heightened focus on our security vulnerabilities and the risks.
For sure. Firstly, thanks for having me bright and early this morning. I think it's a really interesting time in history, geopolitically speaking. I never went about to build a defence firm, where Valarian was born out of an enterprise need to protect sovereign data. So if you're an airline or a bank and you operate between many different nationalities, it's oftentimes really difficult to ring-fence data in specific jurisdictions, whether that's Germany, France, Saudi Arabia, wherever that needs to be. And you're right, it took us a couple of years to build very complex software, essentially to compartmentalise and silo data where it needs to be. What happened last year was really interesting. We were approached by a couple of defensive institutions to utilise the same platform, but for national security prerequisites. And I think for me, it's been a fascinating experience spinning up a defence arm. My co-founder spent 18 years serving in the US Special Forces and then spent about 12 years at Palantir Technologies, which we all know. And our chairman co-founded a business called Darktrace in the UK, which was tremendously successful. So for us, the core team's been phenomenal. And it's a really interesting time, as I said, in history, obviously, with increased NATO spending. And being in the UK, it's a really interesting place to build. So
you have that team, you have that experience between you as well, within the world of finance, within the world of defence, Palantir, Darktrace, with all that pedigree. What is the demand where is that demand coming from? Are you seeing more demand now for that sovereign solution versus enterprise? How is that breaking down? What are going to be the key kind of revenue drivers for you going forward? What does the picture look like?
For sure. I mean, look, it's a great question. I started building this with more of a kind of like macro political view on the world, right? I lived through Brexit, being a Brit here. We got the fight for Ukraine. Hong Kong seized earlier than we anticipated, and now the question mark over Taiwan, right? So I think for me, it was always these ideas of physical sovereignty. The next frontier would be digital sovereignty. That's not just on a national security level. It's also for enterprises. You know, I had a background in finance, as you rightly said. We were so regulated that data exfiltration became a really big talking point for us. So our offices between Sweden and Paris and London, none of that really sensitive data, even in the enterprise, even in financial institutions, none of that could change hands. But now we're in a position, obviously, of doing that on a national level and thinking about defensive institutions. So it is a very interesting place to sit. And I think that the last point I'd make is, for me, there's a bit of an arbitrage going on in the sense of, yes, we just raised a bunch more capital, but only from US investors, right? Really great investors like Scout, that sits in Austin, Texas, a big defense fund, one of the early Palantir backers. But deploying that capital here with the knowledge and capital from the US, but deploying it in the UK and Europe, for me, it's been a fascinating journey. And, you know, there's a lot of really interesting stuff happening in Europe. Obviously, you know, we've got Helsing, our answer to Anduril, you know.
So you raised uniquely from the US. Is that because you were looking to raise in the US, or is it because European investors were not seeing the opportunities that US investors were seeing?
So our first couple of capital rounds were in Europe, but we got to a kind of scale, I think, that we had to go to the US. I mean, not just for capital, but also for the knowledge base. And we had some great investors here. I mean, one British national security fund here, for instance, called MD1, set up by a couple of British Special Forces operatives who became venture capitalists. But I think given the stage that we were at, the maturity of the product, our underlying platform, we went to the US, raised the capital from some phenomenal institutions, and we've really been deploying it here between London and the US.
Who are the biggest threats right now? Is it sovereign actors? And if so, who's top of that list? Or is it rogue groups of hackers? I mean, we've seen retailers recently in the last few weeks in the UK targeted. How do you rank the threats?
That's a really good question. I mean, I think my answer to that slightly depends on the day of the week and what we're seeing day to day at Valarian. But I think the reality is, the threat can be anything from malicious and malign actors, but it can also go back to regulation. It can be also that piece. There's also a threat to businesses of falling afoul of regulation and the cost basis to that. But I think on a more general level, I mean, look, we all see the geopolitical shifts. We all see the kind of tensions between emerging or current superpowers. So we think about that a lot. We do see a lot of things that obviously I can't talk about massively. We see a lot of fascinating things occur every day. So we're just trying to build the infrastructural solutions to protect that on a daily basis.
OK, Max Buchan, thank you very much indeed coming to the studio, talking to us about Valarian Technologies, the latest round, and the opportunities around the defence space as well, the focus on data and security. The CEO and co-founder of Valarian Technologies. Coming up, Ryanair says profit growth this year will depend on working through the risk of tariff wars, those geopolitical conflicts as well that Max was touching on, and macroeconomic blows as the airline flags poor visibility for earnings. We're going to speak with the CEO, Michael O'Leary, in the next couple of minutes. Stay with us. This is Bloomberg. Hopefully about 8. Welcome back. Happy Monday. Ryanair says profit growth this year will depend on working through the risk of tariff wars, geopolitical conflicts and macroeconomic blows. The budget carrier has reported profit after tax for the full year at the high end of its predicted range and announced plans to buy back €750 million of shares over the next 6 to 12 months. Very pleased to say I'm joined now by the CEO of Ryanair, of course, Michael O'Leary. Thank you for coming to the studio, Michael. Let's talk about the risks then and the lack of visibility. What stands out to you right now as the biggest risk to this sector?
It's very difficult at the moment, Tom, to see much risk to the sector, although obviously what overhangs the sector in general is the risk of geopolitical risk, Middle Eastern war, Ukraine war, Trump tariffs, although that seems to be receding. So there's lots of kind of overall risk, but on a day-to-day basis, the industry has never been stronger. The demand for air travel into summer 25 is strong across Europe. We're seeing load factors slightly up at this time last year. Our pricing, I think was the most important thing about our results this morning, is in a year where our average fares went down by 7%, we grew traffic 9%, but we still made €8 net profit per passenger. Pricing into this summer looks stronger. The question is, will we get back all of last year's 7% decline? I'm not sure we will, but we'll get most of it. And that should feed through to a very strong bottom line over the next 12 months. Can
you give us more detail in terms of what you're seeing in terms of that summer demand?
Yeah, I mean, if you take the June quarter, now it's a little bit distorted because both half of Easter last year was in March. Both halves of Easter this year were in April. But, I mean, we're looking at the first quarter here. Average pricing is up a mid-teens on where it was last year. It will be lower in the second quarter, which is the key July, August, September. But we think, it's somewhere in the mid-single-digit price recovery.
What destinations are most popular?
Excuse me. We're so big. I mean, the strongest growth at the moment is still the traditional ones: Spain, Italy, Greece is doing very well for the summer. We're seeing quite good growth back into the UK, particularly regional UK, Belfast, Glasgow, Edinburgh doing well. London's struggling a bit. We don't have much airport capacity growth in London. But overall, the whole of Europe seems to be travelling. I think there's a reluctance to go transatlantic at the moment. I think there's been a dip in transatlantic traffic and more Europeans holidaying at home. Huge volumes of Americans coming to Europe for the summer. So I think, it's going to be a strong summer in Europe.
I wanted to ask you about that transatlantic story because you have seen some of the US carriers, of course, talking about a slowdown in terms of the transatlantic.
Sure.
So you're, to be clear, you are seeing more European travel within Europe from Europeans who might otherwise have gone stateside?
I think so. I mean, there isn't a lot of capacity growth in Europe this year, even in Ryanair's case, and we're usually the fastest growing airline in Europe. Because of Boeing delivery delays, we're only going to grow 3% this year from 200 to 206 million passengers. But there is very strong demand. I think, the economy is recovering across Europe. There isn't much growth, but people are determined to go on holidays. And I think the trend of them holidaying at home in Europe as opposed to going long haul continues.
What is happening on Boeing? Give us an update. Have you had what's the latest conversation you had with Kelly Ortberg, the CEO of Boeing? Have you had that conversation?
I think they're doing very well. I spoke to Kelly and Stephanie Pope in the last 2 weeks. The 5 aircraft that our last 5 deliveries this year, which were due in April, all arrived a couple of days early, which is a good sign. We have 29 aircraft scheduled in the fourth quarter this year through October, November, December. They look like they're on track. They're actually, the hulls are currently being manufactured in Wichita. So I think Boeing are getting on top of it. We're not going to go through this summer with loads of delivery delays. The big issue for us with Boeing is will they get the MAX 7 and 10 certified? They're getting increasingly confident they'll certify it at the end of this year, because we have our first 15 of those MAX 10 aircraft due for delivery in the spring of 2027. And this is critical to our continuing growth and profitability. These aircraft have 20% more seats, burn 20% less fuel, and they are going to strategically lower our unit cost per passenger going forward.
Does that certification happen this year? Is it 2026?
They're saying at the back end of this year. They're saying it's the latter half of 2025. So a good 18 months before we're due to take our first deliveries.
What about the risk? So what about the risk of tariffs? So the EU is considering potentially, as part of its retaliation, if it doesn't come to an agreement, tariffs on goods. It could include Boeing aircraft, of course.
It could.
What would your message be to Brussels on that?
Well, our message would be, there's a 1979 agreement that exempts commercial aircraft. I don't think it's in Airbus's interest or in Boeing's interest to have a tariffs applied on aircraft. Airbus sell as many long-haul aircraft to the US carriers as Boeing does to the European carriers. So it would be a self-inflicted wound. But I think our experience with Trump and the tariffs is, he talks tough and then they walk it back pretty quickly. You saw the deal with the Chinese, the deal with the UK. I'm not sure it will. I'm not that worried about tariffs on commercial aircraft.
Does the deal with the UK and the US, does that mean you could source the aircraft from the UK then? Would you look to that?
It's a possibility. I mean, one of the alternatives is we could take the aircraft in through the UK, but ultimately we have a fixed price agreement with Boeing, and our discussion with Boeing, our tariffs are Boeing's problem, not ours.
What is happening in terms of your letter? So you wrote a letter to lawmakers in the US saying that you would consider potentially stopping purchases of Boeing on this tariff risk, and maybe look at COMAC, the Chinese producer. Is that a realistic threat, really, Michael?
I don't think so. I mean, the fundamental point of the letter, I was written to by some US lawmaker asking me not to guarantee that we won't buy Chinese aircraft, and I wrote back politely saying, go to hell. I'm not giving you, we will reserve the right to buy aircraft wherever we so wish. We remain
not certified yet, COMAC.
No, they're not certified and won't be certified for another 5 or 10 years. But I've been written to by some congressman in the US whose iPhone was made in China, asking Ryanair not to guarantee not to buy Chinese aircraft. Yeah. We would give no such guarantees. I mean, I don't see any great prospect of us buying a COMAC aircraft. The Boeing are making great aircraft. You look at our numbers this morning, an awful lot of which are being driven by the Boeing MAX 8200s. Those aircraft offer us 4% more seats. They're burning 16% less fuel. They're transforming our economics. And I think you add those new aircraft to the declining cost of oil for the foreseeable future. And I think not just Ryanair, but the airline sector in general looks set for 2 or 3 years of reasonably strong earnings.
Talk to us about the oil price. I mean, you're seeing prices now about $62 a barrel on Brent. You hedge around oil prices. Are you hedged to the upside, or are you well protected on lower prices?
No, I mean, we hedge straight for jet fuel into plane. We were hedged in the last year, so the results this morning, we were hedged at $79 a barrel. We're 85% hedged this year at about $76 a barrel, about a 4% fuel saving. We took advantage of the uncertainty post the Trump tariffs or Independence Day, whatever it was last month. We hedged about 40% of summer 2026 fuel at about $66 a barrel. This is jet. Jet at the moment, spot is about 67, Brent is 62. That's about a 13% saving on fuel into next year. Our annual fuel bill is about $5 billion. So if we could hedge out the remainder of next year at $66 a barrel, you're looking at savings of between $700–800 million going straight through to the bottom line, which would create an enormous opportunity for Ryanair to really meaningfully lower the cost of air travel across Europe next year.
Are you buying shares in Ryanair at this level?
We've started a share buyback today, another one. We did 2 last year, $750 million over the next 12 months. But
Can you step that up?
I don't think so. I mean, we're into a rising marketplace. Our shares have had a very good run. We're up 18% of the shares year to date. I don't want to be competing with other shareholders. If the share price is strong, other people are buying, we'd rather step back. But we're going to do a $750 million share buyback this year, and then I think the board will assess and see. What drives the business at the moment is we're very cash generative. Because because of the Boeing aircraft delivery delays, we have surplus cash. And what we've always said to shareholders, when we have surplus cash, we'll return it by way of dividends or buybacks.
Just very briefly, could the current UK government be more bold in terms of trying to reset relations with the Europeans?
Yes, they could, but I think, thus far, and we wait to see what comes out of the UK-EU summit this morning. If they reduce some of the friction on air travel, like British citizens going to Europe can use the EU gates, vice versa. Young people now have more mobility between Europe and the UK. I think that would be very helpful. I think the thing they do need to do here in the UK, though, is remove these ridiculous restrictions on young Europeans coming here to work in the UK. If you're coming here to work, don't have some artificially high high wage rates. We need Europeans to come here to work in retail, in agriculture, for example. Without that, those sectors here in the UK are really struggling, and I think the UK needs to do more. But fundamentally, and I've been violently anti-Brexit for many years, the closer the the trading relationships are between the UK and the EU, the better it will be for the UK economy, for UK jobs, and therefore we will be very supportive of any steps that are taken to improve that.
Michael, thank you so much for coming
to see you again.
Appreciate it. On the back of the earnings, of course, Ryanair CEO Michael O'Leary. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. So Moody's firing a shot across the bow in terms of the ballooning budget deficit in the US. The decision coming through on Friday, but we're feeling the market impacts right now with the 30-year briefly crossing above that 5% level. So at that level, at 5%, you're just about 20 basis points away from that cycle of highs in terms of the upside, in terms of yields and the sell-off of the 30-year, really raising questions about the sustainability then as the lawmakers in Washington try to push through a tax bill that could, of course, add to that deficit in the US. So a focus on that continued yield curve steepening. Let's flip the board and have a look at how this has transpired over the last 3 weeks. You have seen both the 2 years and the 10 years, so the front end and the mid to long end of that Treasury curve sold off in the last 3 weeks. Yields up, price down on Treasuries. Again, as investors reassess the debt sustainability of the US. To what extent does this become more sustained going forward? And let's give you some more context, because in terms of the national buyers, the international buyers of US Treasuries, there hasn't actually been a lack of demand. There's going to be an auction later this week, which could be consequential. But here's the story that really stands out in terms of China's holdings of Treasuries. That's the white line. The blue line is Japan, still the top holder, of course. But here's what's happened in terms of the reassessment of Chinese authorities to how much exposure they want to US Treasuries. That's continued to grind lower. The red line is the UK, taking second spot now in terms of the largest international buyer and holder of US Treasuries. But it's China's decision around how many holdings it wants that is really consequential. Potentially continue to watch that if that trend accelerates. Now, Bloomberg Terminal users can access these charts and others, of course, used throughout the show at GTV Go on the Bloomberg Terminal. There's plenty more coming up, including an interview with Cathy Wood, the ARK Invest CEO, of course, and founder, is on the opening trade at 8:30 a.m. UK time. And the opening trade is up next. This is Bloomberg.